Let me ask you something that's going to sound strange. When you think about multiplying money, what's the first image that comes to your mind? Let me guess. Stock market graphs going up? Real estate deals? Maybe cryptocurrency charts? Some kind of big win that changes everything overnight. Here's the thing though. That's not multiplication. That's just addition with better marketing. Real multiplication, the kind that turns modest savings into generational wealth, that works completely differently. And most people never learn it because they're too busy chasing the wrong definition of growth. I learned this the hard way watching my neighbor Aaron. This guy drove a 15-year-old Honda, lived in the same modest house for decades, never talked about money, never flexed, never posted about wins. And then one day, I found out he owned 7 properties, had fully funded college accounts for all 4 grandkids, and retired at 52. I'm standing there thinking, how did I miss this? How did someone who seemed so ordinary build something so extraordinary? So I asked him, and what he told me completely rewired how I understood wealth multiplication. He said, most people try to grow a tree by shaking it. I just watered the roots and waited. Today I'm showing you 3 multiplication strategies that sound boring, look slow, but produce results that make the flashy stuff look like child's play. Before we drop your city in the comments, I want to know where you're watching from because I'm genuinely curious if this approach resonates differently depending on where you are in the world. Here's the first strategy, and it's going to frustrate everyone who wants quick results. Money doesn't multiply when you move it. It multiplies when you leave it alone. I know that sounds backwards in a world that celebrates traders, flippers, and people who are always making moves. But here's what nobody tells you. Every time you move money, you pay a tax. Literally sometimes, with capital gains and fees. But also metaphorically, you pay with time spent researching the next thing, with stress managing new positions, with mistakes made because you're chasing instead of building. Jewish investors figured out centuries ago that the real wealth isn't in the action, it's in the compounding that happens during inaction. My grandfather bought shares in 3 companies in 1978. Boring companies. Utilities, consumer goods, nothing sexy. And he didn't touch them for 40 years. Didn't sell when they dipped. Didn't sell when they spiked, just held, reinvested dividends, let time do the heavy lifting. By the time he passed, those 3 positions had multiplied into something that funded my cousin's medical school, helped my aunt buy her first home, and still had enough left over to keep generating income. One friend of mine, Daniel, he's the opposite. Always moving, always optimizing, always found the next better opportunity. And you know what? Over the same 20-year period, his returns were less than half of what my grandfather made doing nothing. Because Daniel paid fees every time he traded. He mistimed markets. He sold winners too early and held losers too long. He was busy. My grandfather was patient. Busy lost. Patient won. This is the hardest lesson for modern investors because our entire culture celebrates activity. But multiplication loves stillness. It loves the person who can plant something and not dig it up every 3 months to see if it's growing. The roots need time. The compound interest needs years, not weeks. And the investor who understands this will always outperform the one who's constantly chasing the next thing. Second strategy, and this one's going to challenge how you think about opportunity. You don't multiply money by finding better investments. You multiply it by becoming a better investor. Most people treat investing like shopping. They're looking for the best deal, the hidden gem, the opportunity everyone else missed. And sure, sometimes they find it. But then what? They haven't actually improved. They just got lucky, and luck runs out. Jewish investment culture emphasizes something different entirely. Education as the multiplier, not the investment itself, but your ability to evaluate it. My uncle spent 6 months learning about commercial real estate before he bought his first property. 6 months. Most people would have jumped in after 6 days if the deal looked good. But he studied lease structures. He learned about cap rates. He talked to property managers. He visited 20 buildings he had no intention of buying just to train his eye. By the time he finally invested, he wasn't guessing. He was operating from knowledge. And that knowledge meant when opportunities came, he could move fast because he'd already done the slow work of becoming competent. Here's what's wild. That same knowledge helped him avoid disasters. 3 times he almost bought properties that looked perfect, but had fatal flaws he only spotted because he'd educated himself. Those avoided losses? They multiplied his wealth just as much as his wins because the money he didn't lose stayed in play for actual good opportunities. You see, most people think multiplication is about picking winners. It's not. It's about eliminating losers while building the expertise to recognize real value when it appears. And expertise doesn't come from reading one book or watching YouTube videos, no offense to YouTube. It comes from obsessive, patient, unglamorous study over time. The investor who spends a year learning before investing will outperform the person who spends a year jumping from opportunity to opportunity every single time. Because one is building a foundation, the other is just building a pile of attempts. Third strategy. This is the one that separates people who multiply money from people who just accumulate it. Multiplication isn't about what you make, it's about what you keep working. Let me explain. Most people measure wealth wrong. They look at net worth, total assets, how much they have. But Jewish investors measure differently. They ask, how much of what I have is actively generating more? Because dead money doesn't multiply. If you've got 100,000 sitting in a checking account earning nothing, you don't have 100,000. You have 100,000 minus inflation, minus opportunity cost, minus the growth it could have generated elsewhere. It's not working. It's dying slowly. I know someone who inherited $200,000, put it in a savings account because it felt safe. 10 years later, she still has roughly 200,000, maybe a bit more with minimal interest. Meanwhile, her brother took his half, put it into dividend-paying stocks and a rental property. 10 years later, his 200,000 became 450,000, and it's generating 60,000 a year in passive income. Same starting point. Completely different outcome. Because one person let money sit, the other put it to work. Jewish multiplication strategy is obsessed with this question. For every dollar you control, what is it doing today? Is it earning? Is it growing? Is it creating leverage for the next opportunity? Or is it just existing? And here's the part most people miss. Working money compounds on itself. The dividend from year one buys more shares that pay dividends in year two. The rental income from property one becomes the down payment for property two. The interest earned gets reinvested to earn more interest. That's multiplication, not addition, not saving. Multiplication. It's exponential, not linear. But it only works if you're ruthless about keeping money active. This doesn't mean risky. Active doesn't mean gambling. It means deployed strategically in things you understand that generate returns. And the discipline to never let money just sit idle because you're too lazy or too scared to put it to work properly. Here's what all three of these strategies have in common. They require you to think in decades, not quarters. They require you to value education over excitement. They require you to measure wealth by what's working, not just what you have. And that's exactly why most people never multiply money the way Jewish investors do. Because our culture is built for speed, for instant results, for visible wins you can post about. But multiplication is quiet. It's boring. It's invisible for years until suddenly it's undeniable. Aaron, my neighbor with the 7 properties, he wasn't smarter than everyone else. He wasn't luckier. He just understood that multiplication is a game of patience, education, and keeping capital constantly deployed. While everyone else was making moves, he was making progress. And 30 years later, the difference is staggering. Write this in the comments right now. I'm playing the long game. 4 words that signal you understand what most people won't figure out until it's too late. Do it now. Let me see who's actually ready to multiply instead of just chase. Subscribe to this channel immediately, because what's coming next is going to show you exactly how to identify which of your current assets are actually working and which ones are just taking up space. That video alone could shift your entire financial trajectory. Hit the like button because this information is too valuable to keep to yourself. And the algorithm needs to know this matters, so it reaches people before they waste another decade on strategies that don't actually multiply wealth. And keep watching because the next video breaks down something even more powerful. The exact framework for turning one income source into multiple streams without spreading yourself too thin or risking what you've already built. You're not going to want to miss that.